So welcome to the 2021 tax season here. It's fast approaching, and I just wanted to kind of put a video together to kind of walk through some reminders, some tips to think about, and 2022 things to also kind of plan for. As everyone knows, there is a bill in Congress right now, the Build Back Better Act, and it has been approved. So there's a lot of things that relates to the tax code that's in that act that I'm not going to cover in this presentation here, because if it doesn't get passed, then it's not going to apply to 2021 or may not apply to 2021. So I'm just going to cover things that we do know about right now. And a lot of this, what I'm going to cover is just to make sure that you're ready for the tax season. I think half the battle is kind of just getting prepared. So we'll kind of get right into this here. So first off, tax planning, this is a service that we started offering in, I want to say it was late 2020. We had some clients that signed up for it, and I think it was a success. So if you're interested in it, visit our website, set up an appointment, and we can kind of work on this. And the whole idea is, instead of kind of preparing your return, your business return at the end of the year, the idea is we're kind of talking frequently throughout the year, whether it be every month, every quarter, and as new developments occur, we're kind of having those touch points, and everything is kind of scheduled in advance, versus kind of waiting till the end of the year or when we're kind of working on the return. Because oftentimes some of the things that you could have done, there's a deadline of December 31st, so you want to make sure that you're kind of planning accordingly. So if you're interested, visit our website and sign up. Also, we are working on a new software. It relates to quarterly tax estimates. I'm kind of excited about this. This is kind of a pain point, not only for CPA firms, but also for business owners that are profitable, and just kind of understanding what these estimates are. So it's kind of a light software, but I'm pretty excited about it. Hopefully it's going to be ready this month, but we'll wait and see. So some important reminders: quarterly estimated taxes. The due date is January 15th. If you've been making your Q1, Q2, Q3 payments, great. If not, what you want to do is kind of take a look at the income of your business and kind of estimate what that tax liability is going to be, and then you want to pay it to the IRS and state. What you don't want to happen is come April, when you're working on your personal return, this applies to S Corps and LLCs, is that you owe a large amount of money. 1099s, so these are payments that you made to contractors. That includes law firms, LLCs, but does not include like corporations. If you paid them over $600, the due date to file those is January 31st, 2022. For our clients, we did send out a note to get back to us by January 6th. If we have not heard from you, we're assuming that you're doing it yourselves. We're happy to do it for you. Just drop me a line and we can kind of get you in queue. Software that we really like, if you're kind of doing this yourself or you're not a client, is Track 1099. There's others out there. If you're using QuickBooks, they have their own package, but it's a little clunky. And Track 1099 does connect to QuickBooks. It's just very seamless. If you need to make adjustments later on, they make it so much easy. So highly recommend that. Another reminder is, if you have like a partnership or S Corp, you brought on new investors, make sure you get their K1 information. So that's social security numbers, EINs, addresses, names. Recommend that you kind of just put an Excel document together and kind of store all that. Partnerships, LLCs, reminders: owners, you do not receive a W-2. We've seen this in the past, and you can't do it. It's just against the IRS code. The way that members and kind of shareholders get paid, or members and partners get paid, is through guaranteed payments and distributions. S Corps, there is a new tax form that's going to go on your personal return, and the idea is tracking basis. So the IRS really wants to know what your basis is in your S Corp, and now they're kind of mandating it. So it's not going to go in your S corp return. It's going to go in your personal tax return, but it's a new tax form on the personal return, and you want to make sure that your basis is calculated correctly in the return, because there is a basis schedule in your S corp return that you can do, but the real mandated form is going to be on your personal return. Due dates: S corps, partnerships March 15th, C corps April 15th, and if you're not ready by those dates, you can file an extension. You get 6 months. If you're not working with us and you're going to mail that extension, we highly recommend that you mail it certified return receipt. We've seen a lot of people that mailed it but can't prove that they mailed it, so we recommend that. If you're working with us, you're not ready, we can e-file your extension. Some softer reminders just on the accounting side. If you're not working with us, make sure you're using like an accounting software like QuickBooks, Xero, Wave Apps. Wave Apps is actually a free version, but it's pretty light, limited features. Make sure you're reconciling your bank credit card statements. Just take time now this month, half a day to kind of go through all your records and make sure you have everything in place. Keep your receipts for any expenses. The IRS, if you do get audited and you show them a credit card statement, they'll look at it, but they're not going to really accept that as support for expenses. If you're driving around, we really like Mile IQ to kind of support your travel deduction. Cap tables, I think most of you have heard of Carta. There's another one out there called Pulley. Check them out, another startup, but you're managing cap tables and doing that type of stuff. But you want to make sure you have your cap table all set. Payroll, just a reminder, go through the W-2s, 941, 940s, make sure everything reconciles. Also make sure that your payroll company has your correct address. We've seen in the past where companies kind of change addresses, especially in the COVID era where people are kind of working remotely, and they, some payroll providers kind of mail out W-2s and 941s, and they go to the incorrect address. So just make sure everything's updated. If you offered fringe benefits, make sure they're included in the W-2s. S corps, health insurance, we created a video. It's on YouTube. Make sure you watch this. This is something that you need to do with your payroll provider before the end of the year. This is very important in order to get this deduction. Loss positions, we've seen S corps in the past that have no basis. They're in a loss and they're taking distributions. That's going to create some additional tax for you. So we tell a lot of S corps to kind of hold back on the distributions until the end of the year, until we kind of see what their basis is. Annual reports, this is another big one. So when you incorporate your S corp or establish your LLC, you have to kind of incorporate in a state, whether it's Delaware, Illinois, California, New York, wherever it is. And every year you have to file an annual kind of updated report. Oftentimes states will kind of send out mailers, and if your company's kind of move locations, you're probably not getting those reminders, in which case the state will kind of say that you're inactive, or they will revoke your status, and then you got to kind of pay double to kind of get reinstated. So just double check that you're doing this. A lot of our clients' attorneys kind of manage this process, so you may want to check with them. PPP forgiveness. So if you haven't applied, do it now as soon as you watch this video, because you want to get it forgiven. Otherwise, you're going to start paying interest, and then at some point you're going to have to pay it back. So I would make sure you get that done. For the first section of the tips here, so with this new act that's in Congress, there's talks of tax increases, both for C corps, for individuals. So our typical, simple tax planning is you want to defer your income, especially if you're on cash basis for tax, meaning that you're going to send out invoices and stuff to your clients maybe the following month, and defer your collections on those. Or if you're on an accrual basis, kind of delaying the services. But with these new possible increase in tax rates. There's also the idea of maybe kind of reverse that, where kind of you want to speed it up, where you're in a low tax bracket now, because tax rates may increase and probably will increase starting next year in 2022. So with the acceleration of expenses, you want to look for rent, or if there's software that you buy on an annual basis, maybe you can pay that now this month. Because the idea of these two tips here is reducing your revenue, increasing your expenses, so you have a lower tax liability. Now, you also want to think about, too, with your business, right? If you're planning on selling your business, maybe this is not the best strategy because you want to tell a story and showing that you're profitable. But these are ones that we kind of give every year. So maybe take a look at those expenses, and maybe you can kind of pay extra. Also, on the flip side, as many businesses experienced during COVID, is cash is important, right? So maybe you kind of hold off and wait to see what the first 3 months kind of look like. And also, if you're not doing this, is to kind of do a 3 to 6 month cash flow forecast. If you need help with that, definitely reach out to us. We've been doing a ton of those for companies. Some other tips is employing your children. They're at a lower tax rate. You get the deduction for the wages, and they may not even have to pay tax on the payroll that they receive. Expenses. So we see people buy computers and stuff, and the first reaction is they capitalize those on the balance sheet. Well, if it's $2,500 or less for a single item that you buy, you can definitely expense it. So that's another way that you can increase your expenses. Bonuses. If you're on cash basis, make sure they get paid before the end of the year. But if you're on accrual, you have a couple months to kind of pay those out, and they relate to 2021. Some more tips here. ERC, the Employer Retention Credit. Make sure that if you do qualify, that you apply for it now. I don't believe it relates to Q4 of 2021, but Q1, Q2, and Q3 of 2021 are still in play. But keep in mind, if you got the PPP funds, so just say you got another round of PPP funds and you started using them in Q1 of 2021, and you qualified for the ERC starting in Q1 of 2021, you can't use this ERC. So it's kind of one or the other, but the PPP kind of comes first. So we've seen a lot of people qualify for the ERC, but since they use the funds during the period that they qualify for the ERC, they can't get the ERC. So just make sure about that. R&D tax credit. Even if you're a company that's losing money, even if you're a company that has no revenue, but you have payroll expenses and you're doing software development here in the US, you qualify for this credit. As I always state, credits are better than deductions. We have a separate video on this. If you're interested and want to learn more, just reach out to us. We can kind of give you some guidance. Opportunity zones. This is a couple years old now, but another way to kind of reinvest capital gains in these opportunity zones to kind of defer kind of federal taxes. If you're in a business where you're buying equipment, using trucks, cars as part of your business, now's the time to kind of, buy the equipment or buy that property. Because even if it's above $2,500, you'll capitalize it, but you might get this bonus depreciation in Section 179 expense. So again, even if you're kind of looking to buy a, $5,000 computer, you can do this before the end of the year and kind of qualify for this. Some other credits I'm not going to get into in detail, but here we got the Work Opportunity Tax Credit, New Markets Tax Credit, Federal Empowerment Zone Credit, Family Medical Leave Credit. There's a bunch more, but as I stated earlier, credits are a lot better than deductions. Some more retirement accounts. If you're a client of ours, you'll hear me say this a lot, that it's a cash play, meaning that you're spending cash, but it's better to go to retirement versus the IRS. There's a lot of different plans out there for your business. You just want to make sure they're established before the end of the year. Home office deductions, health insurance deductions. If you're an owner, you're paying the premiums on your health insurance. That's a deduction. There's the QBI deduction, the qualified business income tax deduction. This has been around for a couple of years too. This applies for LLCs, S corps, and this is a really nice deduction that you see not on the business return because these are flow-through entities, but on your personal return on page 1 of the 1040, and it's nice, right? So just say your business has $100,000 of net income, you potentially can have a deduction of $20,000 or so. And this is fairly new. So this is the pass-through entities. So this is like LLCs, S corps. On your personal return, if you remember, and you itemize, right? So you don't take to standard deduction, you itemize. So make sure if you want to go back to your 2020 returns and see if you have a Schedule A, that means you itemize versus taking the standard deduction. But there's a cap here of taxes of $10,000. Well, there's this new rule that came out, and there's 20 states that are participating in it some way or the other. The rules are very, fairly new, but in Illinois being one of them, which is great, where there's a workaround where you can still kind of get this deduction. So just say you had, personal property taxes, you had payroll taxes on your personal return of like 30 grand. The most that you could deduct was 10 grand. But now there's a rule here, and I'll create another video on this just because it's a little complex to put in this video, but there's an opportunity for the business to pay the income of the business. So the business pays the tax on the income of the business at the state level versus the owner, because as you know, S corps, LLCs, they're flow-through entities. The business doesn't pay any tax, but the owners do. But there's a way for the business to pay the tax, and then you kind of get that benefit on your personal return. Check out the health reimbursement arrangement. That's another nice perk for your business. We put this in our recent newsletter in November. There's the Augusta rule that we talked about in the past, where you can kind of rent out your home to your business to have meetings, and that's another deduction. And then some 20, let's see here. Okay, and then some 2022 planning, right? So take a look at how you're structured right now. Some of you might be S corps, and you're thinking maybe we should become a C corp, LLC, maybe we should become a C corp, or C corp, maybe we should become an LLC, vice versa. You should start evaluating that. In SM is single member LLC. If you want to become that S corp, remember March 15th is the deadline to apply. The IRS is kind of lenient if you miss that deadline, but just you want to start rethinking about your entity selection, and now's the time to do it. It's too late for 2021, but something to think about for 2022. There's a section 1202 that I've talked about a lot that benefits the C corp. If you sell your business 5 years from now, you're excluded from like up to $10 million of that first tranche that you get of paying tax. So it's a nice perk. There's rules around this, and there's certain businesses that qualify and others that don't. Nexus study, highly recommend this for companies to ensure that they're paying tax, sales tax in the states. Also kind of doing a study of their employees, right? Because with this remote workforce now, you probably have employees working in many different states and don't realize that you have to file income tax returns in those states or even sales taxes in those states. Cost seg study, if you own real estate investment, building, property, another way to accelerate taxable deductions. And then overall your plan to exit. A lot of businesses, there is no exit strategy. Maybe they never thought about one, but you want to really think about that. If it's in the game plan, whether it's 5 years, 10 years out, if it is in your plan, you want to start thinking about that now and how best to structure your business for tax purposes. Because we've seen a lot of people kind of go down this route and sell their business, and I think that if they would have planned it a little bit better, they could, maybe save on some taxes. And then last reminder on the IRS, so they're backlogged just with paper returns from 2019, from 2020. We've been hearing that people trying to call, they're waiting online for hours. If you ever mail anything to the IRS, make sure you send it certified return receipt, as you have proof on when it was mailed. And if you have trouble getting a hold of the IRS, I recommend calling early in the morning or late in the afternoon. Those are the kind of the best times in reaching them. And if you do get a letter from them, you want to respond right away. That's the best way to kind of resolve any letter that you receive from them. So that's our 2021 business summary here. If you're a client of ours, you're going to start getting some more information, engagement letters, tax checklists and stuff. But we want to kind of get this video out to you in advance. And again, if you have any questions, don't hesitate to kind of find us online, send us a note, schedule a meeting. We're here to help. Thanks.